Aloha, everybody. Aloha. Yeah, we'll get to that in a minute.
Now I know why.
So, welcome back to Real Estate Makes Us Drink. Brian Quinlan here from Daniels Real Estate.
Brian Quinlan here from Daniels Real Estate.
That is false.
Okay, Brad Nick of Nest Mortgage Group.
It's out there for the world to see. You're impersonating someone else.
I really wanted to see how it felt to be you.
Well, you're going to have to grow about 4 inches, at least. You might have to lose a little
To
weight.
get a bigger hat.
You're going to need a larger.
Hey, I'm the perfect weight for your height.
That's probably true.
Yeah.
So, aloha.
Aloha.
We'll bring it in.
Hola.
Oh, there you go.
Cheers.
See, we're multicultural here. I'm drinking Maui Brewing Company's Bikini Blond. So, hence the aloha greeting
like that.
today. And aloha means goodbye and hello.
And hello.
Correct.
And like how you're doing or something, right?
I'm not sure about that, but definitely hello and goodbye. So,
Where's the bus station?
what tequila are you drinking today, Brad?
Siembra Azul.
Siembra Azul.
Very
Again,
good. Very good tequila.
I don't know what Siembra means, and I could Google translate that. I know Azul's blue, so something blue. Is it blue agave?
Okay.
No, probably not.
Well, it is blue agave.
Made from agave.
Tequila. Yeah, but yeah, it's a good one. It's one of my favorites.
Is there any tequila? Okay, having this discussion multiple times, tequilas that have a lot of additives are already on the list of not favorites. But those that are additive free, are there any that are on the list of meh? Not drinking that? Probably.
Yeah. I mean, there's some. I mean, each distillery makes them a little differently.
Oh, okay.
And then you've got some that are like the beautiful big bottle of Three Amigos Blanco. That's not a Blanco I'm gonna drink. Just straight up. It's a great mixer. It doesn't have as full of flavor.
Is it required that you drink that when watching the Three Amigos movie?
God, I hope not.
It should be.
I don't know. They signed a bad deal.
They're on the bottle.
Well, I can't really tell that is
Let's be honest. It
Chevy
is.
Chase, Martin Short, and
Steve Martin.
Steve Martin. Yeah, I
Yep.
want to say Steve Warner, but that's a singer from
That's correct.
Kokomo. So yeah, I mean, it's good tequila, and the Cimarron is a great mixing tequila as well. But quite honestly, I drink Cimarron straight up a lot too. It's cheap. It's like $22 for a liter.
Dang.
Yeah.
I'd say Three Amigos isn't super expensive, is it?
No, that's like $60 for a 1.75.
Okay.
Versus $70 for a 750.
Oh, well. All right.
Yeah, there you go. Well,
Outstanding. Well,
actually, this one I think we're going to actually give some mortgage and real estate information.
well, the last episode was real estate related as it relates to school because
Yeah, but we talked a lot about other stuff.
That is true. But I mean, school is a big decision for a lot of people. And here in the springtime, as people start thinking, next school year I would like to be somewhere else, that was a really good topic, I think.
100%.
While not specifically real estate related, it's a big decision for people. So we actually have some more specifically real estate topics to hit today.
Yeah, we're going to talk about some mortgage and real estate stuff and how it affects our customers and potential customers and those people who are locked into their home and are never going to move because their interest rate's so good and they're never going to realize their equity, and those people that are renting and their rents continue to go up faster than a fat guy's blood pressure.
Well, here we are. It's time for shots because you know what real estate does, Brad?
It
makes me drink.
makes me drink all the time. This is actually a bottle that I bought when my wife and I were visiting Holland, Michigan.
Okay.
Holland.
Is that how they say it?
I don't know.
Well, what are we doing there?
So we popped on our wooden shoes and
Did you?
went up to Holland, and smelled the tulips. And we were up there. My best friend's daughter was getting married, and one of the things we thought was let's slip off to a distillery and get some drinks.
Great idea.
We probably weren't drinking enough wherever we were.
That's what we do on vacation. We find places to drink.
Yeah.
Thanks.
Yeah.
So
Well,
this
there
is made with Michigan apples. It's Applejack from Coppercraft Distillery.
Yeah, so I tasted it along with the whiskey, and I don't know if they call theirs a bourbon or a whiskey. I'm confused, but it was really good. And Tony and I had probably drinks,
Some.
and I thought I should buy bottles of that.
Well, yeah.
So this is actually the first time we've opened it.
Exactly.
We just cracked it.
Open right here. Well, here we go.
Does it taste good?
Do you
Does
have
it even smell good? It kind of smells like you know that smell when remember? Did you ever have those little slot cars that you race on the racetrack?
Sure.
when their motors got too hot.
Oh yeah.
Isn't that what that smells like? But I actually can smell apple though.
You know I don't.
Oh, you didn't smell any apple, did you? You ever say apple and hold your tongue?
It's got a little bit of a burn to it. Tastes kind of like rubber.
Tastes like what that electric motor smells like. Well, guys,
Not my favorite.
Neat distillery, but not a big win.
We're gonna hide that back there.
Oh, you're even getting rid of the shot?
Yeah, it's not deserving of staying up here. Please do not.
You want to wash it down with some tequila?
You will.
I
will
brought
not.
this out for you because so part of drinking tequila is about having a glass that gives you all the smells.
Oh, thank goodness.
And my wife found that one.
Looks like a bowl.
It is, and a lot of mezcals are drank from this ancient thing that in Spanish to me means bowl. I don't remember how they said it, but so they drink them out of these little bowls like these, and usually they're clay.
Okay.
But it's all about being able to get all of the aromas that you don't smell.
Yeah. That most people smell. I just do
You
not.
maybe should get one like a rhinoplasty.
I've had 3 nasal surgeries. I don't think I need more.
Oh, did you just have a big schnoz and now it's normal?
That's correct.
Okay.
No, actually, my grandfather had a really large nose.
Really?
Yeah, and thankfully, I did not inherit the Quinlan nose. I got my mom's side of that genetic pool.
So is that where the old saying comes? When somebody doesn't know someone, they go, "Oh, Quinlan knows."
I don't believe that's it.
Oh, it sounded good.
Mm-hmm. So what's on your list?
Well, how about some real estate news?
All right. Start drinking.
Let's talk about how the world got turned upside down because of this little lawsuit.
Well,
right?
and I will say we've had this discussion a few times. Back when the lawsuit first kind of got settled back in the fall, which blew things up, and then there was an agreement to a lesser settlement from National Association of Realtors.
Like $5 billion.
Yeah, it went from 1.8 billion down to 500 million.
500 million, there you
and NAR decided to say, okay, here's what we're going to do to commissions and make it more fair to whatever. But one of the big issues that we have talked about on a previous episode was how buyers were kind of getting screwed in what that appeared to be because. Right. If buyers were not being able to essentially count on, though it was always negotiable, being able to count on the seller paying for the real estate commissions of both sides, now a buyer, in addition to their down payment, their closing costs, their earnest money, their inspection, their appraisal, all those things that go into buying a house, now they had to add on what potentially could be thousands of dollars of real estate commissions onto all the money that they owed. That was going to put a lot of people out of business when it came to trying to buy a house.
And the big problem was the concessions part.
Exactly.
So concessions on a purchase are as followed. On a conventional loan, if you're putting down less than 10%, the seller can only pay 3% in concessions.
Okay.
Where the average buyer's commissions, the buyer's agent commissions, averaged 3%.
Correct.
So if you needed 3% to help you with your closing costs, in today's world, you maybe just came to the table with your down payment. The seller paid 3% to cover your closing costs, and now the seller also paid the commissions to the realtor. And the big fear was, oh my gosh, now the buyer's going to have to pay the commissions. And then, of course, those concessions rules changed. 10% down to 25%, the seller can pay 6%.
Okay.
And 25% down or more, the seller can pay 9%.
Okay.
On an investment property, on a conventional loan, the seller can only pay 2%.
Okay.
On your USDA and FHA loans, the seller can pay 6%. And on a VA loan, the seller can pay 4%.
It's a lot of numbers.
Yeah, that was really good math in school.
Yeah. So, one thought was if the buyer could, roll the could roll the realtor fees into those concessions, maybe that would help, but it would suck up all the concessions. Well,
right.
That was what the announcement is you're talking about.
Yeah, so Monday, this Monday, which is, my watch's date isn't set properly.
April 15th.
So April 15th, right, which is a day that all of us should remember.
Correct. Was tax day.
Sad day.
Continue.
Hang on, I need to take another drink. 'Cause you said April 15th.
Yeah, sorry, I guess.
I'm going to count the ways that my tax dollars are spent well. Oh, that's all.
Oh, that's quick.
Yep. Well, they don't really do very good with the rest of it.
All right.
Okay, so Fannie Mae and Freddie Mac both announced sellers'
Do we need a
commissions
drum
are
roll?
not. No, it'll make the
Oh,
thing
okay, we won't
sound
do that.
horrible because the mics are turned up so loud.
Yeah, right. We don't want that. Oh, sorry.
So Fannie Mae and Freddie Mac announced
That your phone's
just
going
got an
crazy.
accepted offer on a purchase
Hey, way
Boom!
to go!
Booyah!
So but they didn't announce that.
No, they didn't. No, they don't care if Brad has any deals. They announced that they are not going to count any commissions that are normal and customary for the area within concessions. That means the seller can pay the commissions like normal. It can be negotiated upfront on the purchase agreement, or it can be negotiated into the listing agreement, and you can ask the listing agent how much is commissions on this deal.
And so essentially the seller can pay those commissions and you can ask for concessions.
Still get your concessions. Now here's
That's
where
great.
here's where this wonderful lawsuit really helped the consumer. And that was sarcasm.
Oh!
Because now every realtor out there could decide that they're only going to be a buyer's agent for 4%, negotiate 4%, and the buyers could now have to start paying 4% in commissions because now it's more openly negotiable than it ever was before. And like whenever we see the government reach their hand down and help us, and if you take this all the way back to 2008 and Dodd-Frank and how they were going to protect the consumer from what happening before to never happen again, all it did is cost the consumer money. And you can take it to the side of looking at how profitable banks are today and look at how profitable banks were before and go, yeah, they really made banks more profitable. And that
yeah,
did
they
not
did.
help the consumer. So anyway, that's my rant. FHA has not given us an answer yet on what they're going to do, but they did tell the president of NAR that they are going to follow Fannie Mae and Freddie Mac's rule, and they too are not going to count commissions in concessions.
Okay.
It has not been posted in their policy yet, but I'm sure it will be soon. Monday, when Fannie and Freddie made this announcement, it was not in their policy. It was on Tuesday.
Okay.
VA and USDA, at the time of the message that I got, had not made a decision of their change, but I was told today from a very
Reliable source.
a very reliable source, a very well-known realtor here in Indianapolis, that he was told today that VA has announced that they're going to follow Fannie Mae, Freddie Mac, and FHA. So what that really means is that all of this stuff, sure, there's going to be some changes. One of those changes is going to be a thing that good realtors have always done and lazy realtors haven't done, and that's getting people to sign a buyer's agreement to let them know that, look, I'm your real estate agent. I'm bringing you value. This is the value I bring you, and you're going to contractually agree to work with me and get to experience my value. And over the years, that's gone by the wayside.
Yep.
And what happens to me on the mortgage side is a realtor calls me and goes, hey, I got this new buyer. I need you to get him pre-approved. We're going to look at this home. And then 2 days later, they call me and go, hey, can you send my pre-approval letter to this realtor? Because they weren't told what that value was up front. They didn't understand what that realtor actually did for them. And they didn't understand that the realtor doesn't get paid while they're driving around in their car showing you houses.
Definitely not.
So what this change is going to do is going to help realtors up front, because they're going to lock in this contractual agreement with their buyer, and the buyer's going to understand they can't just go talk to anybody, and they're going to actually see the value and utilize that value, I think, a lot better. So I think it helps you guys.
You know, so I've been doing this for 4 years, and I think that a lot of times when you're a new person, you kind of maybe stick to the rules because you just went through school, and, you know, there are things that are kind of stressed and things that you hear. And so I just knew coming in that the buyer's agency agreement was a big deal because it was there to protect both sides. It protects the buyer. It also protects the agent. And so from the get-go, I went into it with the idea that every time I met with a potential buyer client, I always went to have that buyer's agency agreement signed. You know, and I would often say in the majority of cases, the seller is the one who pays the commission. But in the case where that doesn't happen, you know, we're going to have to talk about what it is that I'm going to be compensated for, because here's all I'm doing for you. Now that while still not required yet, it's definitely coming.
Should have always been required.
Yeah, absolutely. I mean, and I've had, unfortunately, cases where I worked with someone for a while, showed them a few houses, and the next thing you know, they're signing a contract to buy a house with another agent. And I was like, what did we just do for the last couple of weeks here? That's a straight kick in the nuts right there, I'm going to tell you.
Sure is.
When that happens, and you know, you've done that too, where you've worked with people, and then next thing you know, they switch to a different lender. It's
on
like,
the mortgage side, we don't have anything like that.
Yeah,
I mean,
right.
back in the day, there was application fees and things that tied people in. And there are lenders today that are charging their credit report fees up front to get pre-approved because credit reports have become so expensive. And people don't understand that when a mortgage company pulls your credit, it's not free. We'll have $10,000 and $12,000 a month credit reporting bills.
Wow.
It's like $40 a month minimum to start the credit report process for a customer.
I'll be honest, I had no idea.
Yeah.
And I've been doing this for a couple of years now. I had no clue.
They charge, I mean, that's how the credit bureaus make money. They
Okay.
actually make money two ways. They make money charging us to pull the credit. They make money in other vendor services, right? But they also make money selling these trigger leads, which we've talked about, where people get called like crazy. And one of the fears, this is off on a tangent, but they're trying to pass a bill where the credit reporting agencies can't sell trigger leads anymore.
Oh, okay.
So you know what that means?
They're going to jack up your
The
prices.
cost of credit reports are going to go up. Now, the customer pays for their credit report at closing,
Okay.
whatever that invoice fee is. But if you think if I pulled 10 people's credit report that can't get qualified, and you only can pay what your invoice fee is, the others are ones we're eating. So a lot of mortgage companies have gone to charging that up front. We haven't. I trust the conversations that we have with our customers, and I believe it's my job to really sell them on utilizing my service and not going somewhere else. So if somebody goes somewhere else, I feel like maybe I didn't do them the job they should.
Yeah.
Excuse me. But the realtor side, I think a lot of agents that have come in the last few years are so afraid of getting somebody to sign something.
Oh, yeah.
Right? Because if I show you homes and you don't get the opportunity to tell me, no, you're not going to sign this, I got you. You're my customer, right?
Yeah.
And hopefully I win you over to where this never becomes a thing. Now it's going to force the salesmanship of realtors
Yep.
to really step up. And I mean, I think it's really important that the agent themselves sometimes doesn't know how to quantify the value they
Right.
give. And if you don't see value in yourself, it's really hard to sell that value to somebody else.
Yeah.
I think that's really going to help. And now that we know that it's not affecting the borrower in a way that they're not going to be able to buy the home, you're forced to talk about it up front. And you're still going to have that communication with the agent on the house you're showing to know really where you are going in. So, if you look at 2018 and all the changes that happened in our industry, or 2008, the changes that happened in our industry, mortgage people, we all went through this in the beginning. We had to change everything we did about our industry, and it shook it up, and a lot of people got out. And sometimes there's a cleansing that needs to happen in every industry. And right now there's a cleansing in both of our industries. The market
Definitely is in ours.
very difficult. It's hard to get deals.
Yep.
And I talk to people that are seasoned at a third of the volume they've been normally. So there's that cleansing. But I think this is going to really create strong agents and better buyer-agent relationships really going in and throughout the process.
I believe so. And primarily, I would say because we as agents now really need to express to buyer clients what our value is,
Right.
which didn't have to be the case before. And so, like you said, it's going to create a stronger relationship because so many people, even during the process, don't really understand the value of that realtor that they're working with. It's not just somebody who gets you into a house, grabs a key, unlocks a door, and then, writes a contract for you.
Right. I mean, you might be an agent that has a buyer that's going in on a property and you purchase it at a certain price, and then the appraisal comes in low.
I just had that happen.
And the buyer doesn't know how to
No,
negotiate
and
that.
in fact, I we'll go with that example. So I just had that happen, and the significantly unfortunate side is we're literally, okay, I guess a little explanation here. So the contract or the purchase agreement, when you get under agreement to both sides, you agree on a particular price. So I'm gonna make this up. So let's say that we're under contract for a house at $250,000. Okay. Then the lender is going to work with an appraisal company. They're going to send out an appraiser who is going to go in. They're going to look around the house, take pictures, do some evaluation. They're going to look at comps from local sales, and they're going to say, okay, here is the value of the house. If the value of that house from the appraiser says it's $250,000 or more, you're golden. You are on your way to closing after inspection and all that, because the loan is going to cover what you have agreed to in price. In this case, our value came back $20,000 less than what we had agreed to in price, which you can look at it in a couple of different ways. Number one, you could say, well, and I often say this, unfortunately, that value is one person's opinion.
It's an opinion, and unfortunately, it's a part of the process that's been skewed still today by the opinion of a person versus a real process that answers that. Unless you get appraisal waivers, that's a different ballgame.
There you go. So we're at the point now where according to the appraiser, the value of the house is $20,000 less than what we agreed to. So in my example, the house we had agreed purchase price $250,000. So now we're talking that the bank believes, the lender believes that the value of this house is now $230,000. Well, that's the maximum that loan is going to go to, and so in some way, shape, or form, there's a $20,000 gap that needs to be covered.
So actually, it's not the loan.
No,
that's the value that the bank is going to require the down payment to be off of.
Okay.
So if you're a minimum of 3% down, I don't have my calculator to do that math, but so now you're 230 minus your 3% is your loan amount. Although you still have the purchase price to cover, so you'd be bringing $20,000 plus your 3% down to close to cover that number.
There you go. So what I wind up telling people, and I try and tell them in advance before we even start shopping for a house, here's what could potentially happen in this case. And I always say essentially there's 4 scenarios, and I know there's more than that, and we'll get to that also. But scenario number 1 is, as the buyer's agent, I'm going to go to the seller's agent and go, hey, the appraisal came in $20,000 short. Is your seller willing to drop the price $20,000? Which would be great. And if they really want to sell it, maybe they are. And, maybe they know they overpriced it. Who knows? So we're going to agree at $230,000. We're going to work towards closing. Boom, we're done. That doesn't happen a whole lot.
Now, I do get sometimes the realtor on the listing side to go, yeah, we thought it might come in low. Like,
yeah, for sure.
Every once in a while, you're like, the realtor's like, yeah, I knew,
I knew that was going to happen.
And it doesn't mean the realtor necessarily did a bad
No.
job. It just means the seller's probably pushed for a list price that
Absolutely.
he said, look, we probably should list it here. And
that happens, for sure.
Right.
So option 2, I'll say to my buyers, do you have $20,000 extra dollars to be able to bring to this transaction? Because now, at the $230,000 closing price, they need to have their down payment, they need to have their closing costs, and they need to have $20,000 extra on top of that to get the final purchase price to be $250,000.
And what you're asking them is, based on this one person's opinion who believes that you're paying too much for the house,
Yep.
do you want it enough to still buy it?
Yep. So that's option 2. Option 3 is we talk about negotiating somewhere in between. And I always tell my clients, it doesn't have to be 50-50. Ultimately, that would be the best for both sides. But if I try and tell my buyers, you really want this house, if you're going to show, you can show the sellers that you've got some skin in the game if you can add some money over the top of that low appraisal. Whether it's $500, maybe it's $1,000, maybe it's $5,000, whatever amount of extra money you may have that you're willing to throw into the mix to show the seller that you're willing to play ball here. Hopefully we can get the seller to lower the purchase price down to that amount. So let's just say that my clients can bring $5,000 to the table extra. So now the loan is $230,000. You bring the extra $5,000 over the top of your closing costs and down payment. The seller has lowered the price now down to $235,000, and that's going to be the final price of the house. We're going to go towards closing. If none of those 3 scenarios work out the way we need them to work out, in the purchase agreement, it says I'm going to paraphrase this. If financing doesn't work out or financing fails, the deal can die.
Right. Get your earnest money back.
You get your earnest money back. Both sides walk away. The kicker here for the seller is now they have to relist the house if they want to sell it. Of course, they could just take it off the market and be done. Or now they got to go through the whole people coming into their house for showings again, potentially. And now they're talking another 30 to 45 days.
And knowing
if
it
they
might
can
not appraise again.
Correct. And the possibility that it may not appraise as high as they want it to. And so they're taking a chance that they're not going to get the amount of money they want out of, even with a second buyer coming in. My buyers, because I'm the buyer's agent in this scenario, is, well, now we're back shopping for a house. Right now, unfortunately, they're out the money that they paid for the inspection, about $500 or so. They're out the money that they paid for an appraisal, around $500 or so, depending on who the lender is. How much are your appraisals?
I mean, the
depends.
market sets the price.
Okay, sorry.
$500.
Yeah, there you go.
Somewhere between $425 and $525.
Okay, so we'll just say $500. They don't get that money back, but it's better than buying a house that was overpriced. It's better than having to give up an extra $5,000 or $20,000 or whatever would have been a closing to get the house that was overpriced anyways. We're back in the market.
I say this all the time. If we had to get an appraisal on the car that we bought, then wouldn't you drive off the lot not feeling like you got screwed?
Oh, yes.
You know what I mean?
For sure, yeah.
So people are like, I don't want an appraisal. And I'm like, well, I understand the process, and it is a person's value, opinion. But, if everything you bought, someone popped up at the cash register and went, yep, you got it at the right price.
That'd be great.
Yeah, it'd be great. I mean, it'd be far too expensive to have everything appraised that we buy. But.
One of the things that you had brought up is an appraisal waiver, which is good and potentially bad, I will say.
Nah, appraisal waivers are great all the way.
Well, here's why I say potentially bad.
I love them.
They're great because it waives the appraisal. You agreed to the price that you were willing to pay for it up front anyways, and so, the loan is going to cover up to the amount that you agreed to on the purchase agreement. In this particular case, the seller of the house just bought the house last year or 2 years ago.
It wouldn't have got a waiver.
And and that's fine. So 2 years ago, they bought this house, and now at the price that they're trying to sell it at, they're going to lose money.
Right.
Because when you take out all the costs of realtor fees and
yeah, but that's always if you buy a house and try to sell it a year later.
Oh yeah.
I mean, there's not.
That's the thing.
You don't have a more than 8% gain in value.
You are correct. They didn't buy the house coming into that thought as the scenario. It's a job. It's a job thing. And so they're being transferred to another city somewhere. They have to sell it. And unfortunately, they're going to lose money in this scenario. And so my people were like, we can't guarantee that if we overpay for this house, that we're not going to have to move in potentially 2 years. And so that's something, while an appraisal waiver seems great on all sides, in a lot of ways it is, if you're in a situation where you're in a job that isn't guaranteed to be around for more than 2 years, maybe that's not the best case scenario.
The thing about the waiver, though, is Fannie Mae and Freddie Mac outsmart all of us.
Yes, and
right?
You've said that, yeah.
And Fannie Mae and Freddie Mac are watching their dollars way better than we're watching ours. So if you get an appraisal waiver on that property, and if you look at homes, like I see it all the time when I get the waiver, it's like, a realtor will price a home and you don't get the waiver, and you drop it $20,000 in purchase price, and there's your waiver. Right? So, and then what's funny is that my person doesn't buy that house, and it's on the market for 4 more months because it's overpriced, and then they drop it 20% and the house sells. Well, guess what? The waiver is pretty much where it is. Fannie Mae and Freddie Mac, take all the AI and all the algorithms and all the smart computer stuff, and they've put together a system that's tracking value of homes, not only because they have the appraisals on the homes that have closed, but face it, almost every deal is either Fannie Mae, Freddie Mac, FHA, or VA. There's not a lot of portfolioed or non-conforming products out there, so they're getting every appraisal. Like, if you think of how many loans close or how many homes get closed every day,
a lot.
That's a lot of appraisals that are getting logged into this giant computer
Used to be a lot
system. More. Yeah, 2 years ago it was a lot more. But it feels more normal, to be honest. It's hard. It's a little harder than normal.
Interesting you say that, because I've had that thought lately. Like, having come into this at 2020, the I was at the very beginning of COVID pandemic real estate where people didn't really know what was about to happen, with the expectation it was probably going to be tough. And it wasn't, because
so easy.
Everything's sold super easy. I was a buyer's agent, which is kind of what I primarily did back then. It was a challenge just because we were driving a lot of places and making multiple offers. But, man, I mean, homes sold at great high value and all that.
Shooting fish in a barrel.
Absolutely, yes. And, then 2023 came and things started to slow down. And so I've given a lot of thought to that lately. Like, this is what someone would say is a normal real estate market with low inventory, unfortunately. But
well, I was talking to a realtor that we were talking about 2013, and there was a realtor that was there with us that started in 2019, and the 2019 realtor was talking about some stuff, and I looked at my 2013 realtor, and he had this, just this grin. And he talked about a few more things, and my guy just went, "Ha, welcome." Like, he's like, "You don't even know. Like, you've been in the business during the easiest times of real estate, really as far back as I can go in 97. I mean, 20, 21, really starting in 19, and a lot of 22 was so easy to list a home and sell it. Like, really, what did you do? You put a sign in the yard. Like, and you got it in the MLS as fast as you could. Sometimes the MLS sold before you got the sign in the yard. In fact, sometimes you went into your office, you told them you were listing this on Friday, and it was sold on Wednesday above list.
Dude.
So it's like such a different thing, and so many people were jumping in. So many people wanted to move. And we talk about on the refinance side of the world as a mortgage guy. What you did in the mortgage world is you went, "Hi, this is Brad. Oh, you want to refinance? What's your loan amount? 120? Sorry, I'm too busy. Hi, this is Brad. What's your loan amount? 330? I'd love to talk to you. Hi, this is Brad. What's your loan amount? 180? Hey, I can't help you. Hi, this is Brad. What's your loan amount? 400? And that's how fast the phone rang. So you talk about the mortgage world when rates fall to 2. If you weren't closing 25 loans a month, you just weren't coming to work.
Seriously.
You just weren't answering your phone. Now, I'm a guy that in 2021 and 2022, or whatever the rates hit the lowest, I was 18% refinance.
Oh, wow, yeah.
Because I know where my business comes from. It's the purchase world, and that keeps my business very level.
Yeah.
The people that were answering their phone that closed twice as many loans as I closed in 2021 aren't even in the business anymore.
Because they were doing refis.
They're doing refis, and they go away. So it was shooting fish in the barrel for both of us. I'm not saying it was easier for
it's funny thinking back to those times in 2021, and I was on a team that, being new to the industry, they didn't give me listings to do unless it was someone that I knew.
Sure.
And I'd see these huge numbers for people who were not used to doing it, but they were selling 80, 90, 110 homes in a year, and I'm like, they look like gods.
They're amazing.
I know, but now now I see those people, and they're still pimping those numbers. Like, I sold 101. Seriously, that was 3 years ago.
But there's agents today that are still closing a lot of deals.
Absolutely,
and there is a.
My man Sean Daniels is killing it.
And I'll say this, those young guys like Sean that have been in the business a long time, they have great businesses. They have a great amount of momentum. But you go to the workhorses of the world, the people that have that 20 years and 30 years in the business, they're not even fazed by this.
Oh, I'm sure they're not.
I've got buddies that have
all just
they have
cycles.
4-digit MLS numbers.
Oh, yeah.
Some people that don't know what that is. How many numbers are in yours?
I've got 5.
5. Okay.
At 5, I'm in the 42,000.
Okay.
So
I have friends that have 4-digit numbers. I have one, Carol, who has a 3-digit.
No way.
Yeah, I just closed the deal with her.
Wow. She's been around a while.
She's really retired.
I would imagine.
I think Rich Wine has a 3-digit, but if he doesn't, he's in the 1,000s. Okay. So these guys have 4-digit numbers. They hear agents talking about the difference between 21 and today, and they're just like, like, it's just funny to them. But it is funny. But if you can sustain these times right now, rates are high, inventory sucks. Fortunately, we're in a place where home values continue to skyrocket.
Yep.
So when that seller is going to sell their home, you're not talking to them about how to break even on their sale, right? They're making money in most cases.
Yeah, most cases.
So if you can survive these hard times and figure out how to connect, market, and then go back to some of those books we've talked about and a couple others and really learn how to sell. Really learn how to it's not tricking somebody when I say sell. I mean really showing them your value and showing them that they made the right choice with you. If you can do that, your business will sustain big time. The other thing I want to talk about real quick is how many people I get today that are, like I got a customer today that was referred to me by a past customer.
Okay.
And their friend just bought this house. I closed on it with them. And they're like, we talked to Joe. He told us we really should talk to you.
Joe?
But we know no, different Joe. Actually. I closed this one. But we know we can't buy a house. Well, why? Why can't you buy a house? Our credit scores are too low.
Oh, yeah. I hear that a lot.
So what are they?
Yeah.
Right? Well, they have a 640. Okay, so FHA loans, minimum credit score for 3.5% down. Do you know what it is?
I'm going to say 560.
580.
Okay.
So 580 is FHA's minimum for 3.5% down. If you're going to put down 10% or more, do you know what FHA's minimum credit score is?
I'm going to go 550.
Don't have one.
What?
Yeah, so
Shut up.
all loans go through an automated underwriting system. So the information gets plugged in, and this computer makes a decision if you're approved or not. If you're below a 580 and you got 10% down, and you get a DU or LP accept, the computer says, yes, you're approved at that, I can close that loan.
Huh. I have a client like that right now.
They got to have 10% down or more.
They got it.
Okay.
Yeah.
So that's a case where below a 580 can get done. I will tell you that it's a small percentage of 580s and below that get approved.
Yeah.
Or below 580s. 580 and above, there's a lot that get approved. Just have a couple things in mind. You can't have a mortgage late in the last 12 months.
Okay.
You can't have more than 2 installment lates in the last 24 months. Can't have an installment late in the last 12 months. Can't have more than 2 revolving lates in the last 12 months. Can't have an open collection non-medical in the last 12 months.
Okay.
So you got to have a little bit of a clean history.
Sure.
Along with those scores. But the thing about it is the customer shouldn't be making that judgment call. They should be calling and finding out.
Yep.
Right? So another thing I hear...
And it doesn't cost them anything to have that conversation.
No, it only costs me.
Might cost you some money.
So I'm going to ask all of the appropriate questions before I pull credit. Because you don't want to talk to a loan officer that just wants to pull your credit right away.
Yeah.
Because one, if you have a struggling credit score, don't get your credit pulled and take another ding on your credit without somebody giving you some advice based on what your credit score is or could be. Remember, when you look at your Credit Karma score, it's probably higher than your mortgage score. And Credit Karma is not your credit scores. It's an algorithm of what they think your credit scores could be based on the 3 bureaus that have a credit score and the 9 or 12 credit scores you have at each bureau.
Wait a minute. Brad, I've seen commercials where they tell me in the commercial, my credit score just went up by 10 points because I looked at, I did this, blah, blah. What is that?
Boost your Equifax 2.0 credit score, right?
I that's not what the ad is for, but it's like, my credit score just went up. Like, what the heck?
And some of them say how to like the Experian boost your 2.0 score.
It's nonsense.
But no, they really boost your 2.0.
Oh,
but here's the thing. Everybody has multiple credit scores at each bureau.
Oh, okay.
You have a mortgage score, an auto score, a utility score, an insurance score, a bank card score, a revolving score.
No, we've had this conversation. It was season 1, so it has been a while.
It's been a while since we talked about it. I didn't have this down either.
An auto credit score, if I'm not mistaken, is over 800.
It was a 950.
Yes, exactly.
When all of your regular credit scores only go to 850, that auto score goes higher. So if you have a great auto score, meaning you got a car and you've paid that payment for 12 months or 24 months on time, maybe you have one credit card. You're going to have a great auto score. You're not going to have a great revolving score because you just have one credit card. And your mortgage score is going to stink too because you don't have enough balanced credit to drive your score up. So your Credit Karma is going to be skewed way higher because of your auto score.
Huh. Okay. Sorry, continue.
So anyway, that's a little credit score thing. I'm still surprised on how many people think you can't get a home and get a conventional loan with less than, what is it? What's they all say? What's everybody say you got up down?
Like Oh, sorry, 20% down.
20% down.
Didn't realize we were going to throw around scores.
I just tossed you out.
Thanks you. I do got it. Yep. Everybody thinks you got a 20% down for conventional. Not true.
So if you haven't owned a home in the last 3 years, what's your minimum down payment on a conventional loan?
I truly do not know. I throw all lending people to you.
3%.
3%. Thank you.
But it's good for you to know.
For
when
sure.
you're talking to that person that goes, well, I can't go conventional. I don't have 20% down.
No.
You can say, have you owned a home in the last 3 years? If they haven't, guess what they are?
First time.
Yeah. It's one of the only things that you become reborn again,
Yeah.
right? Maybe religiously,
That's a different thing.
being a first-time home buyer. And I think you can do it with virginity too now, if you wait long enough.
I don't
If you're
believe
a
that's
born-again
true.
virgin.
I
Google that.
Yeah, please, somebody
Fred.
Google that. Fred.
Fred. You could talk about it on our next show.
Stephanie, could you check on the re-virginity of things?
A born-again virgin. Google that. I'm telling you.
I don't
it's a
believe
thing.
that's.
At any rate, 3% down. Now get this. Let's say you live in the Indianapolis metro area, the donut counties.
Sure.
Which doesn't that sound good?
It does. Now I want to get donuts on the way
Like
home.
if we called them the bacon counties, that'd be amazing.
Well, it would be. My wife would not like that. She's not a bacon person.
You don't like bacon?
She really does not.
Just like donuts?
Depends on the donut. She's not
What
a
if
huge
it's
donut
maple
person.
bacon?
That's the thing. She's gluten intolerant, so donuts become a challenge.
I listen. I can't. I'm not gluten intolerant. I can't freaking have it. But I love donuts. And if you came in here and said you got a gluten pass, this will not make you sick, I'd eat a donut off that floor
Well, all right.
and cover it in bacon.
I almost hit donuts this morning. I was gonna hit Rise and Roll. Oh, so good. Voted #1 donut in the nation a few months ago. Just throwing that out there.
Longs.
Oh, they're good
Used to
too.
go there
Stephanie
all the
works
time.
right by the Long's Bakery.
Gosh, I'm
I don't know
hungry.
why
I'm
she
so
doesn't
hungry
weigh
right now.
300 pounds because it's.
Because she's gluten intolerant.
Oh well, I guess that's true. Maybe that's the saving grace of her being over there.
Well, let's slip back to that conventional 3%.
Oh, we're back
down.
in business. Okay.
If you're not a first-time home buyer, the 5% down is your minimum.
Okay.
But if you haven't owned a home in 3 years, you're a newly minted first-time home buyer.
Nice. So even if I've owned a home before, if it has
long
been
as
more
it-
than 3 years or more,
Yep.
I'm considered first time again.
Yeah, in
Oh,
fact, because the
fabulous.
loan application says, have you owned a home in the last 3 years? Doesn't ask you anything else.
Nice.
So then if you're under $48,650, which is 50% of the median family income,
Okay.
I can get you a free $2,500 grant.
Nice.
That's not like any of the other down payment assistance programs where you're locked in.
Yeah.
This is just a $2,500 from Fannie Mae or Freddie Mac.
Awesome. And that's for a conventional loan? We're still
Yep,
talking?
conventional loan.
Nice. Okay.
And a lot of people think you can't do those.
Someone should be writing this shit down.
I did.
Somebody watching this should probably write this shit
I'm
down.
telling you, here's the thing that's also crazy.
Share
People
it
like,
with
I can't
others.
buy a house. I don't make enough money.
Yeah.
There's no homes like that for sale. I closed a deal this year, first-time home buyer, FHA, $69,900.
Excuse me?
$69,900.
Was it a 1-bedroom shack?
No, it's actually a nice little house in Andrews, Indiana,
Dude, where's Andrews?
up by Wabash.
I got a guy maxes out about 70K. Can he live next door?
I've sold. I haven't sold them because I'm with the realtor. I've closed several homes this year at the 100,000 or below.
Dude.
So what you got to do is you got to
Hard to
get out of
find.
this city.
Oh,
You got to step out. You got to go to.
I went to Newcastle.
Yeah, see, this kind of regional. But you got to go to Newcastle,
Shelbyville.
Anderson, Shelbyville, Rushville,
Terre Haute.
Terre Haute.
Sullivan.
And
Yeah.
go north. Go up by
Anderson?
Elwood,
Okay.
Marion,
Yeah.
Wabash. Okay, so you can find homes in those. So the thing is people get caught up in this whole I can't buy because I don't make enough money. But you gotta broaden your horizons.
People need to broaden their horizons, and that's like I said, I have a client around 70,000, and I've thrown him a few houses as I'm searching, and he says, well, that'll work if I can find employment around there, and that sometimes is the hard part.
Sure, that's something you got to make sure it's within your drive time.
Yeah.
Right. But I mean, if you're renting, and you can figure a 1-hour commute, and now you're owning versus renting, and you own that home for a few years, you build that equity in that home, and you become maybe better with your credit and a higher wage earner. Now you always can move back to the city and have that equity you need for a better down payment.
That is a consideration, potential downside to something like that might be a 1 or 2 bedroom house in the outskirts of God knows where. The resale value becomes a question.
Sure.
But there are always people who need low value homes wherever. It just might take a little longer to sell.
But even that 69.9 house, if you look it up 3 years ago, sold for like 42,000.
Yeah, for sure.
Right?
Yeah.
So
I mean,
none of them are going backwards.
unless it goes to crap, the house itself, and you got to take care of things.
Right. Yeah.
Yeah.
So we talked about one other thing that we really wanted to touch on today, and
I'm excited for your list. This is great.
It's about this lower dollar amount that we talked about. You had a customer ask you, I believe, what was this?
So the question came up, is there a minimum loan that you can get? Because I used myself as an example with the question, because when we paid off our house several years ago, we then decided we're going to buy a new house. The sale of the previous house that was paid off was not enough to cover the cost of the new house. We were buying a brand new house, upgrading, whatever. So we needed some money. So we talked about, we're going to need a loan of, I'll just say we needed a $60,000 loan to cover the difference between what we could transfer, right?
That's a big mortgage.
Exactly.
In 1932.
Exactly. In 2017, it was,
Not a big mortgage.
Exactly. And so,
you went like this, you went, I took this call.
I remember lenders looking at it going, we could do that, but there was just some hesitation there. And so I wasn't in real estate at the time, so I felt like there was a minimum loan amount that we were approaching that they didn't want to loan to us. And we were saying we're going to have that $60K paid off in essentially a short amount of time. And so that was actually the hesitation. It wasn't necessarily the loan amount.
It was both combined.
Okay. So that came up today. So I brought that to you. Is there a minimum loan amount? And I guess in my scenario, what are the repercussions? Because I found out it was a kind of a lender repercussion scenario.
Sure. A lot of the minimum loan amounts in the conventional world you'll see is $50,000.
Okay.
Now, it doesn't mean that Fannie Mae or Freddie Mac won't do a loan under $50,000.
Okay.
It just means a lot of the banks won't.
Oh, okay.
And if you think about it, and you put it in real estate terms, you get paid 3% of the sales price.
Right.
Right? So, hey, I want you
on
to...
average, and yes, that is negotiable.
Yeah, and 3% is I use that as an easy average.
Yeah, it's easy, yeah.
Really,
easy math.
But let's say I want to buy a house, and I've got 37 homes listed for sale that I want to look at, and they're north side, south side, east side, Shelbyville, Newcastle, Greencastle, and they're $37,000. I only want to buy one of them.
Okay.
How fired up are you?
Not super fired up, not going to lie to you.
Okay, so in the mortgage world, guess what? We're all paid a percentage too, right?
Yeah.
So the average loan officer makes 1% of the loan amount.
Wow. Okay.
I will tell you
I actually knew that.
A $60,000 loan is just as hard to do, if not harder, than a $450,000 loan.
Okay.
So we're not supposed to prioritize our time in that manner, but a lot of loan officers do, right?
Sure.
So, but there is also some other difficulties in those because the rates, believe it or not, are higher for those lower loan amounts, this is a technical, confusing thing to say, but all mortgages become bonds. If you got $10 million worth of bonds and you have to service those payments, you have a lot more expense in servicing $50,000 loans in $10 million than you do $700,000 loans, right? So your workload is higher the lower the loan amount. Therefore, there's a higher cost, higher servicing cost, higher interest rate in the smaller loans.
Making me drink.
So that's a confusing thing, but so that's why lower loan amounts are more expensive. There's not technically a minimum, but when you play in the world, there's kind of minimums where nobody will go under a certain point. And the part of paying it off early is after 2008, they took away the prepayment penalties, right? So no one had a prepayment penalty to pay a loan off. I still get that question all the time. What's the prepayment penalty? Well, it's illegal.
So it is.
Conventional FHA, VA, USDA, no prepayment penalties. When you get into the non-conforming or subprime or what we're calling non-QM loans today, those have kind of brought prepayment penalties back. Those bank statement loans or DSCR
I've
loans.
never dealt with one of those.
I don't do them either.
Yeah.
But those have some. But So they took the prepayment penalty away, but all of the work that goes into a mortgage that becomes a bond, that's put together all of its servicing, if it pays off within 180 days of consummation date or the sixth payment being made by the customer, we get a fine.
No way.
So, which is more than what we make on the loan. So we don't want you to pay it off early. So when I have that client, occasionally I have that client, look, I'm selling my house. I just need this loan to buy this house. I'm going to sell that house and I'm going to pay you off in a month. So here's the deal I make you.
Please don't.
If you pay the payment for 6 months, I'll do your deal for you. And here's why, and here's what it costs me. And if you don't want to do that, I won't do your loan. But please don't tell me you will, and then get me, because I'm going to put a lot of work in here, and it's going to cost me, $6,000, $8,000, $10,000 if you pay off early. Most people, when you explain that to them, they go, "Yeah, I can make 6 payments."
Yeah, I mean,
You're going to help me facilitate this. I can help you.
yeah, that was. I remember that was kind of my thinking, anyways. I won't speak for my wife, but my thinking was, yes, we wanted to pay it off as soon as possible, but at the same time, 6 payments isn't a big deal at that point.
Right.
So, I mean, it took us longer than that to pay it off anyways, but
Sure.
still, that was good.
It's more of those ones that I'm doing the deal non-contingent, and when that house sells, there's enough money to pay the whole thing off. That's where the conversation takes
Yep.
place. And I don't believe it's a negative conversation to have. And the lenders have to be open and honest with what's going on, and no one's out there trying to hurt somebody.
No, certainly.
Right? So,
Um,
okay, so one other things I wanted to
Yeah.
ask you about, or you asked me about, that we have on this list.
Oh.
So usually you're the guider.
I
of
know.
the
I don't
program.
even recall what else I asked.
But there's one other thing on the list. You had a person that asked you about buying land.
Oh yeah. So, and that's actually where the question of us, what size loan amount, what's the minimum loan amount you could get, and so that's where I went into that scenario. But that was for buying a house. I did not realize that after having a conversation with you, land is different. So, how does how does lending for land work?
Well, if you think about it, a residential mortgage.
There's a house there. There's a structure.
Right. You have to live in it.
Yeah.
Right. So it's improved property.
Yes, right.
So whenever you're buying vacant land, that's not a mortgage.
Correct.
It's
Yeah.
now a land loan. So we don't do that
on a purchase agreement, which I have written one. It says unimproved property.
Unimproved property,
Yeah.
right? And the taxes say it's unimproved.
Yeah.
Right? So that's not actually a residential property. So if you're going to buy a piece of ground, that's going to be a land loan. You're going to usually do that through a local bank, or some bigger banks or mortgage companies can do some land loans if they're holding those in house or servicing them. And one of the things that people have to think about when they're buying a chunk of land to build a house is, I know we live in a beautiful free country, but after you buy a piece of land, you got to get permission to build what you want to build on it.
Yes, you do.
Right. So the contingencies upon finding out if that land can hook to municipalities,
Right.
or can that land pass a perk test and have a septic system on it? Are we going to build something that the county will agree that we can build there? Like, does it have to have brick, or can it be a mobile home? Right. Those are all things to take into account before you go purchase a piece of ground and buy it.
Yep.
Because just because you have a great plan of what you want to put on this piece of ground,
My house on that land is going to be phenomenal.
but it might not be allowed.
Oh.
So those are some other things to think about when you're buying land. And a lot of people have talked to me about building, or asking me about building, and there's really two different worlds of building. There is, I'm going to buy a piece of ground. I'm going to have a custom home built on that piece of ground. I'm going to hire a builder. We're going to design it together. I'm going to get approval from the county to do everything that we want to do, and I'm going to build a beautiful custom home, right? And then there's buying a new house and having a home built that isn't a custom home. And you're more accustomed to
Starting with the letter A, accustomed, right?
how that works.
Yeah.
So I can't explain that piece, 'cause I haven't done those in 20 plus years from back in the old days. But so if I called you today and said, Brian, I want to build a house. I don't want to build a custom home. Like, I don't want to go find a piece of ground, but there's a neighborhood that's popping homes up like corn just down the road.
Sure, yeah.
And I think I want to buy a new house and build one. What do I do?
I guess you'd have to know who owns the land. Is there a builder, whether it's D.R. Horton, whether it's Arbor, whoever that owns that space? And some of those builders will allow you to custom build on land, or you buy a piece of land.
Like a build on your own lot.
Yes, correct.
But if I'm more thinking, hey, there's a neighborhood down there that are building homes like crazy, and I want to build a new house. Like that. Most of my callers that say I want to build a new house, they're not thinking of buying a piece of ground and building a house. They're not thinking about having a custom home built. They're talking about that neighborhood they've drove by 10 times. That is that D.R. Horton or
Arbor,
Ryan, Fisher,
Ryan, MI, any of those.
All those.
Yeah.
And that's a whole different process.
Yes.
Than even coming to me to get pre-approved.
Yeah.
That's a whole different ballgame. And you guys, in fact, one of the things up here on our slideshow says, don't go.
Take me with you.
Right.
Actually,
don't go by yourself, because there's important things and why you should have a realtor when you go to those builders.
Yes. And so every builder has a model home on their property in that neighborhood where they have a representative representing that builder to help you go through the process of buying their house. And in some cases, they are licensed realtors. In some cases, they are not.
Are you serious?
Yes.
I did not know that.
Yes.
Seriously did not know that.
I was actually talking to someone yesterday who said it's actually a conflict of interest if she was a licensed realtor to work for that particular company. There it is. And so, thanks for looking. And
I could have been watching down there, I guess. I forgot.
What some people will think about is like, why do I need a realtor if I'm going to go in and talk to their sales rep? What's the big deal? They have their own sales rep. Why should I don't need a realtor, essentially.
I mean, does it cost me more?
No, and that's the thing. It doesn't cost you any more. In most cases, that builder will actually pay the real estate agent for the buyer a percentage. Okay? And if you don't use a realtor, they don't cut the cost of the house. They just don't have to pay it out, so it's money that they get to keep. So
it's almost proof that the NAR thing was not going to reduce the prices of homes.
There you go. Yeah, it no benefit whatsoever. So what I like to tell people is when you go in and talk to a builder and you're going to sign a contract to build a home with them, and it doesn't matter if that home is a spec home, which means they've already built it and you're just buying a house that's already finished, it's just brand new.
Sure.
Or you're starting from a bare piece of ground, you choose the lot and you're deciding which home is going to be built there, and you pick out many of the pieces, not all. Doesn't make any difference. The contract you're going to sign is lots of pages. I mean, I was just
way
vaguely...
more than a regular purchase.
Oh, absolutely. A purchase agreement on a pre-existing home is 8 pages. 9. Thank you. It's 9 pages.
They just changed it. They added that stupid page.
A contract to buy, a purchase agreement to buy a home with a builder is like 100.
That's at least 30.
Yeah, no, it's a whole lot. So the majority of those pages, if it's 193 of them, are not to protect you, the buyer. They're protecting the builder.
100%.
And you should have someone working with you who is going to talk you through that process. They've seen that contract. They know what's in there. There are certain deadlines that a builder needs to keep in mind and stick to. And honestly, hassle is a big factor involved, because you're going to get messages from that builder while you're potentially at work. Or they can go through your realtor, and that's their job, to act on your behalf, and they can communicate with you when they know you're available to talk.
Right. You used a word that I love to use when I'm working with people. I use that a lot. But in this case, I think it's the wrong word.
Okay.
You're working for them.
Oh, for sure. In this case, that is the case.
It's a very big difference.
Yes.
We work with people all the time, but in this case, you are straight working for them to make sure that they're protected in that transaction.
Absolutely. Something I just learned as a new realtor, because I built my house brand new in 2017. I had a realtor. And during that process, I can distinctly remember, why do I have this guy working for me? He's not doing anything. And I can totally see where that's the perception, because it is, I will say, less work for a buyer's agent to do. But again, it's not costing you any more money. But, the builder's doing the majority of the work. undoubtedly. They're the ones building the house and making sure they stick to deadlines. But what the buyer's agent should be doing for you is making sure that their communication is good, that the deadlines are being stuck. So what I just learned is there are codes, requirements by the city in which that home is being built, where the city will come out and make sure that the electrical is done correctly before they put up drywall, that
The concrete was done first.
the concrete was done correctly, and
before they put
all
a
of that is
sill plate
done. But if that is scheduled with the code enforcer or the code person from the city, and that city worker, something comes up and they don't come out, the builder is off the hook.
Correct.
And they just keep going. So that thing may not have been coded correctly. And so that can be a huge problem down the line that the the buyer has no idea.
As a buyer's agent, I know I have others that are doing this, that they coordinate their calendars to make sure that those code enforcement meetings are done, and doing some of those walkthroughs and taking pictures and things.
Yes, absolutely. And one of the things I recommend is that as the buyer, especially this is only if you're starting essentially from the ground up. I've done some spec homes where the home is already done. And
Sure, yeah, it's different.
But
you get to pick the
like
carpet.
before the drywall is up, go in and take pictures of the studs.
Oh, yeah.
So that in this closet, right behind this section of the wall is a pipe.
Right.
Do not drill there.
Yeah.
That's important.
I have a realtor that I work with. His name. We both work with a lot of people, so we never get upset when we say some of the person's name. I work with an agent on the north side named Alan Williams.
Jerk. Hi, Alan.
Alan's a phenomenal agent. He got his start as a CP Morgan sales guy, right? So he talked about these very things in a thing I was at the other day, and I was like, I never thought of that to go. And he did that as a salesperson, as a home salesperson. CP Morgan would do these pictures to go, hey, look, there's pipes behind this wall. Don't hang a picture here, right?
Yeah.
When we built this, I was hanging things up going, crap.
I hope there's nothing behind here. Yeah.
Right, yeah. So that's a big thing that nobody thinks about, and that's something that you, the buyer,
no, you don't
work
think about
all
that
day.
whatsoever.
You may not have time to go, and you go tomorrow and there's studs and the plumbers are working. You go the next day and, oh, isn't that awesome? The drywall's on. Oh, crap, I didn't get any pictures.
Yeah, and my wife took pictures when we did our walkthrough pre-drywall.
See, that's
She may still have them on her phone for all I know. But I do remember
right next to your nudes.
Correct. So they're in two files.
She just got green in the face.
They're both studs. She said.
Both came from
Gosh,
Lowe's.
she's my favorite. So that I actually remember one time we did reference that before we started doing something
that's
to
a
the
great
wall.
idea. When I heard that, I was like, that's
yeah.
phenomenal.
So that's just one of the things that, as the buyer, number one, it's less worry on your shoulders, and number two, something you just don't even think about. And something else that we didn't do when we built our house that I tell all my clients now when they're doing new build, have an inspection.
I was getting ready to say, do I get an inspection?
Yes, and I remember in 2017 thinking, why would I bother getting inspection? They had to go through all the code requirements of the city. It's a brand new build. They should have done all this correctly. I had total faith. Well, here's what happened this past Christmas. I was putting lights up on my house. I was up at the peak of my garage, and I'm looking over to where the roof of my garage meets the wall of the bathroom that's behind it, and I can see a gap in the siding at the bottom where it meets the roof, and I can see the studs. I was
where
like,
the water's going in.
oh my gosh, that is something that probably would have been called out on an inspection. That had I been more intelligent back in 2017, who knows?
Do you need a handyman service to come fix that?
I don't. I have a handyman, and in 7 years we haven't had any issues, so that's good.
Well, you don't.
It's worked out.
Okay, you could say that. I agree with that. You don't know you have issues. When we were doing our remodel, we found out that probably for 5 or 6 years, water was intruding down through the roof next to our chimney.
Oh yeah, we have actually had that when we had the insurance guy on.
Yeah.
We talked about the multiple plumbing issues you had.
So much. No, this is even before that.
Oh, before.
This is where we had a roof replaced. They didn't flash it properly, so the rain was coming down in on the sides of the chimney, which is in between the studs, the insulation, and the drywall. So you didn't know it's there. And when we did the remodel and they opened that up, that was just covered in mold.
Oh my goodness!
Because for 4, 5, 6, 7 years, the flashing wasn't done right. And the water is not going, whee, You know where I knew it was coming in there.
Yeah.
Right? So
You had no idea.
until I tore it
Silent
apart.
killer.
So if you can see the studs, water got in there.
Man, yeah, that's rough.
And it needs to be made to where water can't go in
I'm
there.
gonna need to work on that. So,
got a
anyways,
handyman guy for you.
so back to
Why to
when-
have an inspection? Why to have a realtor?
yes. I mean, it's important to have somebody that's there protecting you, and so I encourage people. While you may not think you need a realtor to buy a new build, it's encouraged that you have one because it's someone there working for you on your behalf to make sure that things are done correctly, on time, and taking the hassle away from you so you can go about your life while your house is being built.
Absolutely.
But I will say hi to Fred.
Fred.
He's always watching.
Fred
We
doesn't
appreciate it.
only just watch this. Fred puts it on an 85-inch screen in his house. He sits in his living room. He pops a drink, and he usually calls or texts me while he's watching.
He leaves a comment on most episodes, and I wish more people would leave
I do
comments
too.
on episodes. My wife does, which I appreciate, but again, it's just two people. We need more comments.
Upcoming episodes, we do have
Handyman?
we have a handyman, we have a roofing guy, we have a true Hollywood director,
Yep.
screenwrite, and we also have Ruben, the general manager
Ruben,
of
yeah.
Tony's.
Yeah.
And we are going to have Fred on the show.
We are. He's
And,
looking forward to. He's like a celebrity.
We almost had Fred this week, so
That's right.
we may have to throw in an extra episode. We'll call it the Fred episode.
That's gonna be the best.
Free, ready, entertaining, daily.
Delightful.
Delightful. There you go. That's the Fred episode.
There it
you go.
is. All right, we're done here. Thanks for watching. Real Estate Makes Us Drink. We'll see you next time. Cheers, my friend. See ya.